And we're just getting started. I'm going to make Matt the host. And here we go. So Matt's going to get his screen share going, and I'm going to give you a little intro on what we're doing here. So welcome, everyone. I'm Rob Booker. I'm here with Matt, one of our coaching members and my friend. And we're going to do Bull Market Strategy Guide 2. I sent you a link, and it's in the slides as well. There's a link to a document that has a bunch of charts. What we're going to do is quickly let Matt move through these charts and identify whether a trade exists, and if it does, why, and if it doesn't, why not. Matt doesn't have to necessarily tell us a stop loss or a profit target. He can give as much or as little detail as he wants, but the main thing we're trying to do here is identify on the chart whether something is or is not a trade, and also try to not overthink it. We're also not looking for trades on other strategies or trying to discuss or become experts in any other arena. We're just trying to focus our efforts and get really good at one thing. So without further introduction, you can see Matt's screen here is shared. It's the middle of his screen. It's perfect. It looks great. There's some background and stuff around it. We're not going to take questions, so you can just keep your questions. We'll do that another time. And I'm only going to come on and speak if Matt asks me for help. And otherwise, we're going to take about 30 minutes at the most right now and work through these charts. So Matt, I'm going to mute myself and I'll only come back if you need me.
All right, let me just check on audio because my headphones just cut out on me. So can everyone hear me all right?
Yeah, we can hear you just fine.
Okay, perfect. All right, everything should be in the same order that it's in the document. So I'm just going to go through this the way Rob has done it. I'll work left to right across these charts and just look at the opportunities. So if we look at day one right here, that's the type of candle we want. We want a small bullish candle right there as the possible entry. We've got a decent wick on the top of that. I guess what's come up a lot lately is whether people take early entries on these types of things. So I guess on these really tiny candles, a couple times that idea has come up. So that one would sort of qualify for that. Day two, we get this bearish engulfing candle here, which is what we want to see. That confirms the entry. We've talked about getting in toward the end of the day. What this brings up then is, where do you get out? Because if you look at the following day, we gap up, we've got a bullish candle. It doesn't look like much of an opportunity to make some money there. So some of these might wind up being losing trades that we have to get out of. During that day, you're going to have some profit as you're on this wick. So if you're watching these closely, maybe you monitor that, you take a little bit of money and you get out of the trade. If we go over here, we now have a larger bullish candle, bit of a wick, bigger candle than we'd want to see as our day one. But day two, we have a tiny little doji bear candle, so we have no entry on there. Same thing in this group here, bit of a bigger bull candle, some wick, but again, our day two bear candle is not engulfing. It's too small. It doesn't close below the low of the day before, so we have no entry. And that continues right up in this area as well. Same kind of a pattern. In fact, the bull candle here, we don't have any wicks anyway, so nothing interesting about that candle. So the rest of these are no trades. And then we got something over here on the far right, but let's leave that one alone. We'll move on to the next slides. We'll go to RMD. If we look at our day one, we've got a decently small candle with a wick. Our day two, it's a small bear candle, but it is below the previous days, so that's a good entry. And what we see then, that one gaps down. So this turns out to be a good trade if we get in on day two. Maybe not a lot of money to be made in there, but certainly something to be made. And if we're going to be out in 24 to 48 hours, you've got a good opportunity on this trade. If we move over to this candle, we see, group all of them, a big gap up, which is nice. We have really long wicks, which is also a really positive sign, but we're followed by this very small bull candle the next day. So that's going to be, no entry that we see. A lot of people might say, well, that we get this next bear candle, a big engulfing, engulfs the previous day as well. So that could be a potential entry. And Rob might say that this is, in this case, we're bending the rules then from our regular strategy one bear entry trade. But it turns out that it could be a profitable trade for a couple of days if you wind up getting into that late and staying in that trade. So that one could work out nicely. We'll go on to RMD. So a couple of these, as you're noticing, are going to be the same ticker symbol, just on different time periods. We're back, I'm not sure if this is 2017. I know some of these were back as far as 2017. So our day one here, again, really big bull candle, not what we want to see on that. And then we're followed by a tiny little bear candle. So those are not ideal entry situations. Not looking at that as an entry. We come over here to a possible reverse strategy. Now we get the same kind of a thing. And well, there's a couple of ideas going on here. We've got the bear candle is actually a little bit too big than we'd want to see, although we have a good wick on that, but we'd rather see that as a much smaller bear candle. We are followed by this big, the big bull candle here though. And maybe that becomes, that's not a good arrow. This is what Rob's been looking at lately and wants to look at a couple of more issues like that. Does this make a good entry? Because we're seeing this bear candle here followed by that bull candle that doesn't quite engulf it, and then this gap up the following day. So maybe there are opportunities there, but that's not the same strategy that we're talking about. We'll go on to the next one. So Macy's. This is again a reverse strategy concept. You've got the big gap down. You've got a decent bear candle here with a little bit of a wick. But now with that drawn, you can't even see that tiny little doji of a bull next to it. So we have no entry there. We have pretty much the same situation happening here. No real gap on this movement, but we have a wick. And again, the following day, doji bear, no entry on this. So no entry on these Macy's charts on this one. Somehow I seem to have gone, I think, to number 20 on the list. This is Microsoft. I thought these things were all laid out, but this is number 20. This is Microsoft. So what we get here, something that came up in the call the other day, we have a nice gap up and a fairly small candle. It's a bear candle though, and it's not just a little doji, it's a little bit bigger. So that might not even be considered a proper entry point. We do, however, get the following day an engulfing bear candle, which would make sense looking at it in hindsight, but we don't really know if we want to go into this trade. That's not really the strategy that we're looking for. Maybe if that candle were a little doji candle, that might make more sense. And then we run it up. So we get the next day one, we get a nice gap up, candle with a bigger body and smaller wicks, not so good, followed by the bear that's obviously not an engulfing bear candle. So we have no entry there. Then we have a big bear candle here, no gap up, no entry there. But what Rob has circled here, we've got this, the same pattern again with the big bear candle and this nearly engulfing bull candle followed by a gap. So it seems like that's something that we're going to want to keep looking at a bit. I just want to make sure I'm not going to get out of, let's see, these things do seem to be in disorder. Let me just try to do something quickly here. Looked at that one, that was AMD. We looked at RMD. Looked at that RMD. You can't see what I'm looking at. We looked at Macy's. Okay, here we go. Now we're back on track. All right, so again, another Macy's, and what we have here, again, a really big bear candle on the gap down. We'd rather see that as a very small candle. And again, followed by another bear candle. It's not what we want to see on that reverse. We want that to be a bullish engulfing candle taking out a small bear candle. So no entry. Over here, we have no gap down, really no entry there. Same thing over here. Smaller candle, no gap here at all. And again, were followed by a bearish candle anyway. So no entry on this Macy's chart either. We go on to the next one, also Macy's, and similar thing. We've got this bigger bear candle followed by this little doji of a bear. We have no entry on those. So on these reverses, we're looking for a small bear and then a bullish engulfing candle to give us the entry to take that as a bullish trade. So we see nothing on that one. Moving on, so XLNX. Similar kinds of things. We get no gap really, tiny little candles, but all these candles leading up to this are really small. So this doesn't present anything that's really exciting. And then we have just this tiny little doji, almost non-existent bull candle the next day. So no entry. The next one here is a bull candle, small enough that if we saw a bullish engulfing candle here, maybe that would have made a decent entry. This is what we're talking about. If we get a really small doji there, maybe that works out pretty well. But we have no bull candle here on the next day, so we still have no entry there. Here we get a nice gap up on a bullish candle, but we have no wicks. And again, we have this really small doji of a bear candle. So that's no entry for the bear trade on that one. And what we get is a kind of a decent one here. We get a nice long wick on this candle, and the following bear candle closes below. So we have a good entry point there. And like we talked about earlier, we might not get much of a profit here because what we will see the next day is a doji. Maybe people would stay in that depending on where you're going to set your stops to get out of this trade. And you might pick up a little profit 2 days later, but that's going to be a really, really iffy trade. If we move over here, again, bigger bull candle without much wicks, and then a tiny little doji after it. So we wind up with no entry for the bear trade on that side either. We go on to another XLNX. Better little setup here. We get a little tiny bullish candle with a nice wick at the top, which looks good for us for the entry. That might even be a good early entry on that one. Oops, and then we get this this nice engulfing. Oh, still can't get a good arrow there. Trying to draw with my finger on a touchpad, but a nice bear engulfing candle there, which gives us a couple of days. And here, you're just going to try to want to figure out how you're going to run your stops, right? If you're getting in here, if you do an early entry, you can set your stop maybe a little bit higher and carry this down for a little bit. You're going to make some profit on these days. But again, you're looking for 24, 48 hours to get out of this trade. So you have some opportunities on that one. Moving on, we go to FCX. Again, bigger bull candle than we want at that point. We have no real wicks. It's not a great looking candle for this strategy. And then we're followed by a bullish little doji. So no entry for that on FCX. And if we're looking for strat 2, everything's jumping above the pivot. So we don't see anything interesting on that one. Move on to the next, FCX. Again, really big, enormous, bullish candle with no wicks. We have another bullish candle following it. We don't get an entry there. Nice gap, but this isn't working out for us. The bear candle following, even if you're looking for a late entry for something to happen, you can see you got no follow through on that. So I would say that should have been a no trade based on this candle. Certainly with the follow up, you have no trade there. Moving on, sticking with FCX, we get a little tiny bit of a gap at this point, but we have this bull candle here, no entry. Same thing, we have a gap up, bullish candle with no wicks, followed by a bullish candle, no entry. We have a little bit better of a candle here with a little bit of a wick, but this bear is not engulfing. We want to see that as a big engulfing arrow to give us a good opportunity. And you see this thing just trends up. So none of those present good opportunities for getting into the trade. Moving on, LRCX, Lamb Research, and yeah, starting off, we have no gap here from any previous information that we're able to see. We get a candle with a big bottom wick, not much on the top, followed by another big bull. We have no entry between here and here. This is a gap. Maybe that presents an opportunity, but again, we get the bullish candle right there, no entry. We get a gap with a bear, which we don't want to see. Although that's tiny, that could have been a good opportunity. And this is where if you're doing an early entry on these little tiny candles that are not the right style that we want, if you go early into that, gaps up the next morning right here, you're out of that trade, right? That's a bad trade. But you've got this gap up, no real wicks here. You got another little doji. So if you're waiting for confirmation, you would not have gotten in there. We get another gap up. We get a better looking candle here with the wick. And then following that, we get our bearish engulfing candle. So this would be the entry on this one. And then unfortunately, we're followed by this big bull. And that's going to, that gaps up in the morning and that just keeps going up. So we'd probably stop out of that with a loss if you're paying attention to that the next morning. So that turns out to be a bad trade, but the setup was what we would look for to get into that trade. All right, LRCX again. We have a nice gap, decent gap here, but we have a big candle with virtually no wicks, and we get that little doji of a bear. Doesn't work for us for an entry. We carry across a couple of days, so we have this resistance right along here that you're seeing. We get another gap, a big full candle with no wicks on this spot, but we get this really big bear candle the following day. So if you're keeping an eye on this, you've had resistance across this area, the gap up, and then this big bearish engulfing. So that would be, I think, a decent entry looking at this whole scenario right here. A good entry to get in, and here you have an opportunity. If you want to just keep adjusting your stops to the previous day's open, you can stay in this trade and make some money for a couple days going down. So this would have been what I think is a really nice opportunity to make some money on one of these bear trades. If we keep going now on Lamb, looks like a gap open right there, a gap up. We have no real wicks. So not ideal candle, but we do get a good bear candle that engulfs, well not engulfs, but closes below the low. So that becomes a good entry. This, the top of this candle, might, well, that one never works well, might have gotten people to stop out of that though. As you gapped up in the morning, and this was some trading volume up here, people might have stopped out. Depending on how risky you are, if you stayed in this thing, you could have made some money that day. But there's other things going on there that might have caused people to jump out of that at a small loss. Moving across, we get no real gap on this one. The candle's larger than we'd want to see, very small wicks. We're followed by that bullish candle the next day, and we get no entry on that opportunity. Let's go on to the next one. Still with Lamb, and now we're looking at a reverse here. So we get the gap down. We get a bearish candle with no real wick, so it's not an ideal situation. And then the next day we get a bullish candle, but it closes below the close of the previous day. So there's no real entry on that, although it moves up. That would not have been an entry for us. We get another gap down with a better looking candle body and wick, looking for a bullish engulfing candle the next day, but we get that bear, so we never get into that trade either. So some setups here, but nothing that made a good entry point for us. Moving on to STX, and here we've got a great looking gap and a tiny little bull candle with a nice wick at the top, which is really, I think what we want to see is a lot of that, this thing doesn't push up high at the end of the day. That's what I don't like seeing on a lot of those candles that have no wick at the top. They had all that buying pressure right at the end of the day. And this is followed not by a really big bear candle, but it's fully below the previous days. So that's a really good entry. I don't know if I'd be early on that one, because this thing could certainly have been, in a trend right here. But you get a good entry point here. And again, you get some days, depending on how you want to work your stops, how risky you are, you can carry that for a few days and make some money. But certainly in those 24 to 48 hours, this is a good opportunity, particularly if you're watching this closely and follow this thing down. Maybe you jump out at some point during the day and make some money based on what that spread looks like on the price scale. So that's a nice opportunity there. Moving on to the next one. We have a huge gap, which is great. We have really big wicks here, which is great, but it's a bear candle and it's not a little doji. It's a fairly decent sized one. So we don't want to see that. We do get this bearish engulfing candle the next day. That might be a good enough sign to indicate a decent trade though. This candle you can then justify, it's small enough, we've got a good entry, and that could be a good spot to get in. We have a big gap, so you've got some room that you could fill here, and we see that that does trade down. Again, working your stops, you might be able to carry that. Depending on your risk tolerance level, you can make some money on that trade. Moving over here, we get, very little bit of a gap, but we wind up with a big bull candle, a little bit of a wick at the top, but we get our following day. That bear right there is too small. It's fully above the body of the other candle, so we have no entry, no trade on that chart. All right, coming down to Twitter on a reverse strategy. Nice little small bear candle with wicks, and we get this following bull that moves beyond the top of the bear the previous day, and we get a couple of days of upward movement there. So that becomes a nice opportunity for a reverse strategy one. Not a whole lot of movement on the price over here, so that's going to be pretty tight squeeze to make some money, but the opportunity is certainly there, depending on what you buy in terms of number of contracts. Good shot on that one. And we'll go to what will be the last one, since we already did the other Microsoft at the end. Here we've got a fairly good sized candle, but we have some good wick length and we have a really big gap there. And we're followed by this great looking bear candle, nearly fully engulfing, but closing well below the previous day. So that's a great opportunity. And you get these big drops for the next couple of days. So this is a really nice looking pattern right there for the ability to make some money on that trade. And that's going to be the last one, because we already talked about this one, which is number 20 in your sheet, in your pamphlet there that Rob sent out. So that's my take on those 20 charts that Rob's put together. So Rob, I don't know if you can take this back, if you've got any closing comments.
That's great. Thank you so much. This was a really, really, really great job. Super impressed with what you did here. It's not easy to, first of all, to operate webinar software without any previous experience, let alone also get on in front of all these other people and sound like you know what you're talking about, which is exactly what happened. You do know what you're talking about, and this was excellent. My final comment here is that great job. I don't want to add anything to it. I wouldn't change anything that you said. I appreciate you doing this, Matt. This was great.
My pleasure.
Okay, everyone. That's it. We're going to have another call tomorrow. I don't know what time. I'll just jump in the chat room and I'll do a call tomorrow. And I just want to wrap up the week. If you're watching this recording on bear market strategy number 2, there will be a part 3 of this coming pretty soon. So thanks everyone for being here. Can't wait to see you again.